The world is reeling from a decision made in Brussels. Europe seized $105 billion in Russian central bank assets. This was more than a freeze. It was outright confiscation, meant to punish Russia and fund Ukraine's reconstruction. But the move has backfired, sending shockwaves through the global financial system. The rules that once governed international finance are now in question. For decades, nations trusted that their reserves in dollars and euros were untouchable, protected by sovereign immunity. Europe's action shattered that trust, showing that economic interdependence can be weaponized. Western leaders initially celebrated, believing they'd found a way to hold Russia accountable without war. But outside the West, many saw it as a dangerous precedent. Russia retaliated, seizing European corporate assets and escalating the conflict. The deeper impact trust in the Western-led financial system is eroding. Central banks worldwide are reconsidering where to store their wealth. The very concept of a safe asset is being redefined. What was meant to isolate Moscow may have accelerated the fragmentation of the global economic order. The world is moving toward financial multipolarity and unpredictability. The decision to weaponize finance has changed the rules for everyone. Now, every nation is rethinking its place in the global system. The consequences are only beginning to unfold. The era of unquestioned Western financial dominance is over. Historically, freezing a nation's assets was a temporary tactic, not outright confiscation. Even during the Cold War, the reserves of adversaries like the Soviet Union were never seized. That changed when the EU and G7 immobilized $300 billion of Russian assets in 2022. In 2024, Europe went further, seizing profits from these frozen reserves, over $105 billion. The move was both symbolic and practical. Support Ukraine, make Russia pay. But it crossed a line, challenging the principle that sovereign reserves are sacrosanct. Economists and central bankers warned this could undermine the euro and dollar's global dominance. The European Central Bank itself cautioned against damaging the euro's reputation as a safe haven. Yet, political imperatives overrode economic caution. The result: sovereign assets in Western banks are no longer unconditionally safe. Their security now depends on political alignment with the West. This is a paradigm shift, unsettling nations worldwide. The rules of global finance have changed, and not everyone is comfortable with the new reality. Trust in the old system has been fundamentally shaken. Russia's response was swift and calculated mirror measures against Western assets. European and American companies in Russia suddenly found themselves at risk. Factories, energy projects, and bank branches were seized or nationalized. The value of these corporate assets quickly reached tens of billions, offsetting Europe's confiscation. Russia targeted companies from the most vocal EU supporters, creating divisions within Europe. European businesses, now suffering losses, began to question the wisdom of the original asset seizure. The pain was no longer abstract. It hit boardrooms and workers directly. The era when business could operate above politics is over. International investment law and treaties offered no protection. Russia's actions proved that in great power competition, all economic ties are political. No investment is truly safe from state intervention. Multinational corporations are now forced to factor in geopolitical risk like never before. The global business landscape has fundamentally changed. Political risk is now a central concern for every international investor. The Russia-Europe standoff sent a chilling message to central banks worldwide. If Russia's reserves could be seized, whose assets are truly safe? For decades, central banks held reserves in dollars and euros, trusting Western markets. That trust is now broken. Geopolitical risk is part of every calculation. Behind closed doors, countries from China to Brazil are rethinking reserve strategies. The nightmare national wealth frozen or seized over political disputes. Central banks are quietly seeking ways to reduce exposure to Western currencies. The shift is gradual, but the direction is clear: diversification and de-risking. The old system's foundation of trust has been badly damaged. The guardians of global finance are now operating with new caution. In response, central banks are diversifying away from the dollar and euro. Gold is back in favor, physical, unseizable, and held at home. Countries are repatriating gold from Western vaults, prioritizing sovereignty over convenience. The message trust in the old reserve system is broken. Beyond gold, nations are trading more in local currencies. Russia and China settle most trade in rubles and yuan. India buys oil in rupees. These are not isolated deals. They're part of a global trend toward de-dollarization. Alternative payment systems like China's CIPS are gaining traction. Regional payment networks and central bank digital currencies are emerging. A parallel financial universe is taking shape, less efficient, but more resilient to Western pressure. The world is building new financial infrastructure to reduce vulnerability. The era of Western financial monopoly is ending. The energy market is ground zero for de-dollarization. The petrodollar system, once unshakable, is under threat. Russia now demands payment in rubles or non-Western currencies. China and India buy energy with yuan and rupees, bypassing the dollar. New shipping routes and insurance systems support this parallel market. Even Middle Eastern producers like Saudi Arabia are considering accepting yuan. The goal isn't to collapse the dollar, but to create a more balanced, multipolar system. As less trade is conducted in dollars, U.S. financial power wanes. The weaponization of finance is accelerating the shift to a new global order. Was seizing Russian assets a strategic win or a costly mistake? Supporters say it was a moral stand, funding Ukraine and punishing aggression. Critics argue the long-term damage to Western financial trust outweighs short-term gains. The system's strength was its neutrality and reliability. Now, that's gone. Countries are seeking alternatives, accelerating trends like de-dollarization. The West's financial dominance is eroding as a direct result of its own actions. The $105 billion seized is dwarfed by the trillions now reconsidering their safety in Western markets. The move empowered competitors and fractured the old order. The price of moral clarity may be lasting strategic decline. The loss of trust is reshaping global financial centers. London, New York, and Frankfurt face new skepticism from international investors. Cities like Singapore, Dubai, and Hong Kong are rising as neutral alternatives. These hubs attract capital from countries wary of Western sanctions. The dominance of Western centers is no longer assured. The global system is fragmenting, with different hubs serving different blocks. Rebuilding trust will be difficult. The precedent of asset seizure lingers. Without credible assurances, Western hubs risk a slow decline as capital seeks safer shores. The seizure of Russian reserves has triggered a fundamental reordering of global finance. The era of Western dominance is giving way to a multipolar, fragmented system. Trust, once the bedrock of the old order, has been shattered. Countries are diversifying away from the dollar and euro, building alternative systems. The West's ability to use financial sanctions is diminished. The world is recalibrating, with new challenges and opportunities ahead. The genie of sovereign asset seizure is out of the bottle. The financial world of 2025 is defined by caution, competition, and a hard-learned lesson about the fragility of trust.